This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. Today is just a small red day, which was at first, initially, it really hurt because I came into the market. I had a really good read on price. Price literally did exactly what I was anticipating it to do, and I timed it properly as well. But I was not able to execute that move at all, and it ended up as a red day. So days like this are obviously frustrating, right? Because the market gave you exactly what you were looking for, but you failed to execute, and it ended up being a red day. So I was down initially, but I refused to let myself stay down. I pick myself up mentally, and I do the process that I do every single day that allows me to learn from the session. So I walked away knowing exactly what my biggest weaknesses are. So I'm actually grateful for this session. I'm grateful for the losses that I took today because they really revealed a lot of flaws that I have and will continue to hold me back if I don't bring awareness to them, if I don't make any effort to correct them. So let's get into it. Today is September 24th, 2025. It's crazy. 2025 is already almost over. September's already almost over, and then we just have October, November, December, and that's it. 2026, a new year. It's crazy. Another year of trading, another blessing. But the optimal market approach, let's read it. So how I felt today, I'm leaning bearish today, but not 100% confident in the idea because I'm not sure if we're going lower or if we're going to start consolidating here. So this is how I felt initially, but the more pieces that I read on the 1 minute time frame and the more that I looked in alignment with the idea of lower prices, the more confidence I had in it because I was getting a lot of confirmations that, yeah, we should go lower at 930. So what was the draw on liquidity that I established today? Meaning, where do I think the market's going to go? For me, that was Asia sell side, a new day opening gap tucked above previous daily low and Monday low beyond that. So previous daily low and Monday daily low beyond that. So if we go to 15-minute chart, you can see the levels that I'm looking at. See this little separation right here? That's the new day opening gap, and it's paired with, if we look at these lows right here, they're very clean. They're way too clean. They're literally perfect. So I'm going to be targeting that, as well as Asia low right here. We can see that we can kind of establish a trend line, right here. So that's going to be low resistance sell side. I'm going to be fading that. Now notice how previous daily low did not take Monday daily low, and that is also another smooth area in price. So I'm simply targeting these smooth areas in price. Hopefully you guys can see that. Let's see. Yeah, okay, we're good. So, higher time frame narrative. Yesterday broke lower, completely overlapping the up move from Monday, forming an intermediate term high, but didn't close well over that candle. It still respects the premium wick from Thursday and closed inside Monday's range. Now rebalancing yesterday's range pre-market, seeing some response at premium PDR. So by premium PDR, I just mean a premium of the previous day range. See that red line right here? That's that midpoint of yesterday's range. So this is yesterday's low, yesterday's high. The midpoint of that, above that, is going to be a premium. We can see that the market is finding some premium sensitivity in a premium of the previous daily range. Okay, so market criteria. I like how price has rebalanced to a premium of the previous daily range and left a very clean edge overnight, what I just mentioned. The only thing stopping the market from going lower is the 1 hour discount wick, but below that, it has a very clean level. New day opening gap and Asia low also support a draw. So I'm finding some really solid reasons for the market to want to go lower today. So how do I think it's going to get to these levels here? I'm watching for a potential break at 930 if price rejects the 4 hour, 1 hour, and 15-minute sell side amounts, buy side inefficiency from yesterday on the left side of the curve. So what I'm looking for why, I'm looking for something along the lines of protraction sells. So this day was in accordance with my protraction sell playbook. These are trades in the past, and this is today. If I look through these, if I just give you a brief glance on the 15-minute time frame, you're going to kind of see that it's a similar setup where we have an intermediate term high forming in the overnight session. Prices clearly transitioned to the sell side of the curve in this market maker sell model. We have a smooth edge left in the overnight session. We open in a premium, and the market's going to break lower right at 930, but it rejects a fresh 15-minute or 1 hour premium array formed from the transition from the buy side to the sell side of the curve. So we know we're not going higher because of the rejection that the market shows at premium arrays left from the left side of the curve, or looking back, looking left. And it's kind of the same thing that's happening here. Intermediate term high rejects the 1 hour imbalance, transition from buy side to sell side of the curve. How do we know that? We have a change in state delivery right here on the 15-minute time frame. We have an intermediate term high. So we know that the market's likely not going to take out this high, and it's also formed in the heart of the London session. It can either form in the heart of the London session or pre-market. Either or, kind of the same thing here, right? Note the smooth edge left in London and Asia. We open in a premium and we break lower right at 9:30. So it's going to be the same thing with this example. This is my protraction sell playbook where I'm looking for sells based on higher time frame narrative and market criteria. And you can see that today it was basically the same thing, the same characteristics, the same type of move happened right at 9:30. So I was looking for the market to break lower right at 9:30. Now, where did I go wrong? Maybe I should let's just read the 15-minute time frame, okay? So in essence, I'm watching the fresh 15-minute sell side unbalanced buy side efficiency from the left side of the curve to see if price rejects it and breaks lower at 9:30. I'm noting the smooth edge is setting up. Let's go to the hourly real quick. So I'm noting the response to premium PDR, the CIBI and CISD, and the smooth edge created on the run up, thinking this could break lower from Monday low. Note the consecutive lower highs put in. So I'm noting the consecutive lower highs put in as a sign of weakness. I'm looking at how the market's respecting that hourly order block. If you look at the 15-minute time frame, this is how I really know. I started looking at these details pre-market and I'm like, okay, this thing is probably definitely going lower and it's probably going to be my traction sell playbook, because look where the bodies stop right at that hourly change in the state delivery, which is simply the last up candles before the down move, right? Once that open price is violated, we know it's a change in the state delivery. And we know that the market is using that as a premium array because the bodies stop right at it. That indicates the algorithm is using that level. So following that, what do we see? We see a change in the state delivery on the 15-minute time frame. That leaves an inversion fair value gap. Now, I didn't have this annotated going into the open, but the market rejected that perfectly. So I'm not going to leave that level here. Another thing that I really like to see was how the fact that the market set up leaving this smooth edge, this smooth lows before the open, and that's congruent with a sell idea. So I believe I annotated that. If I pull up the session recording. Okay, so this is what I'm looking for, right? Going into the open. I want to see if the market can punch out these relative equal highs that I noted here and reject this gap here. Reject the CIBI, form an intermediate term high, meaning high, lower here, lower from here. Looking for strong rejection of the 15-minute sell side unbalanced buy side efficiency or fail to trade to consequent encroachment. So I'm looking for that, right? The first thing that the market does, okay, and I'm probably just going to walk forward from the recording through here to explain what I was thinking and why. The first thing the market does, it trades up, takes out this high, and it was extremely aggressive too. Y'all saw the open today. It was fucking nasty. It was nasty. It was disgusting. It was disgusting. It was a disgusting rejection. Look how fast they just shoved it up there. And then boom, immediately the other direction. So they just shoved that shit up there. Retail is probably buying long in a breakout above this high. They've seen what the market has done recently on the daily time frame, and they're thinking we're still bullish. We're going higher right at the open. That's 100% something that I would buy back in my day, back in my supply and demand and order flow days. I literally used to do this very thing right here. So boom, they're trapped long in a breakout. Look how nasty it is. Comes all the way back inside the range. Now I'm going to wait for this to form a wick because I want to annotate that and then see the response to that wick. Now I'm noting that this is definitely probably going to break lower right at 9:30. So now I know this is break lower, and what do? Switch this top step, and boom, immediately I'm throwing the sell limit order on out there, and this is the emotional trigger that I learned from today that makes me extremely anxious, really eager to get on side with the move that I'm looking for. And I'm sure that y'all probably feel the same way in this situation, but you've got to learn how to keep your composure, because today I was not able to keep my composure. And that's the reason that I missed this move, this entire move that I planned for, and literally timed perfectly in my pre-market plan. When the market leaves without you, you set your sell limit order out there, and it just leaves, and it just goes, and it runs right for your objective in a couple of 1-minute candles without you getting your filled. Now you're like, what the fuck do I do now? Great. And so that is the exact situation that I was faced with today. And for me, that's an emotional trigger. Because I was not able to keep my composure, I got extremely anxious, trying to find a way to get on side with this move, right? So I execute on the change in the state delivery, which would be these up candles here. Now I put my sell limit order here. I guess you could say the change in the state delivery is here, but this is kind of an indecisive candle, and usually we don't count that for a change in the state delivery. But it just leaves, and I'm like, motherfucker, what do I do now, right? So I'm looking for this level right here. Shoot. Okay. I'm looking for... Too far ahead. I'm gonna spoil it. Can't spoil it. So I'm noting, I have this level annotated right here, right? Extremely smooth, it's literally flat. I'm targeting that. That's what I target. It delivers that within a couple of minutes. So this is how I'm feeling now. Now if I go to my intraday price action, check-in, my intraday check-in, my live trading check-ins at 9:33, this is how I'm feeling. Feeling frustrated with the market that it just went instantly delivering the level I was looking for without offering retracement for me to get on side. This fucking market, a lot of size, that's how I was thinking. I was like, fuck, this fucking market. So I'm telling myself, I'm trying to coach myself back into a state of mind where I can execute logically and rationally with risk that makes sense. I tell myself I have to keep my composure and find a way to get on side, but I couldn't. So I say that. I can't compose myself. I just chase price like a motherfucker and impulsively threw on a short. I have to step away here. Instead of setting a sell limit order there and having confidence it should reject that and keep trading in the direction of my draw on liquidity, I have to wait and see the reaction, then sell it short, chasing it. This is the second weakness that today revealed, and I've noted this in a lot of past sessions. If you've been following me, you may note this, that instead of me just confidently executing the PD array that I think price should reject as a continuation move or as an opportunity to get on side with what I'm looking for, I let the market trade into that level and then trade the reaction off of it instead of just trading at that level, if that makes sense. So I'll show you from the recording what I mean by that. But I'm noting this fair value gap, right? Super open, super obvious. It's first presentation in this moment. I don't know that it's first presentation in this moment because I'm kind of losing my mind at this point in time. There's kind of a fire going on inside my mind. I'm extremely emotionally heightened from this situation that it just went like that without me. So instead of just confidently selling short at first presentation, I have to sell the reaction to it. So instead of just selling short there, I tell myself, okay, I'm going to let it trade up into that, let a change in the state of delivery happen at the PD array, and then sell the up candles here, right? But it just reached for it in 2 up candles. Now ideally, for me to use that kind of way of getting on side with the trade, maybe it'd leave like a down candle here, or this would be a down candle. Ideally, and then it would leave an up candle inside the gap, and then down candle over. This probably doesn't make sense. I'm just gonna stop explaining that. And then this is what I do here. So I do sell short, but how I did, I was not happy with that execution at all because I was just impulsively jumping into the market, and how I felt about the trade too. I knew that if that trade were to be a winning trade, there's no way that I could be proud of it because of how I felt about it. I knew that I was literally just impulsively jumping into the market. The risk that I would frame on the trade would not make sense at all. If I were to sit at the, and this is literally how I thought about it because of this YouTube channel. If I were to sit at the end of the day and review this trade and recap to my audience that I took this trade, but I just impulsively jumped into the market, that's not something that I can be proud of. That's not something that I can repeat, right? So the second that I realize that I'm impulsively jumping into the market, what do? I take that shit off because I know what I did wrong. And I know that regardless of the outcome of the trade, this is not going to be a winning trade, even if I make money on it. Because if it is a winning trade, what am I doing? I'm reinforcing this strong tendency that I have to lack confidence in executing on the PD array I think the market should react to, and just impulsively reacting to the reaction off of it, like this. You saw I just dragged my limit order and got filled. And play it again. So I'm watching how price is reacting to this gap, right? I note how it closes below it, like this. So it closes below it, and then the following candle immediately paints lower. And so I'm like, okay, yep, it's rejecting it. I jump in. Now another thing that influenced me to taking this off is, okay, look where I'm short at. For me to frame the risk on this trade, where does it have to be? There. So I'm like, fuck, what did I just do? I just opened up the risk big time. Because if we go to trading view and we frame the risk on that, I got in somewhere around the high of this candle, right? So now, in order for me to properly frame risk, off of first presentation, it has to go above the high of that candle. But I'm just thinking of this now. I have a rule, or what I'm doing right now is simply just using a fixed 16-point stop loss, because I know that 99% of my winning trades do not go over 16 handles of drawdown before they play out. Or I could have just placed my stop loss above first presentation and anticipate price to respect that gap and keep trading lower. So I chased short, but at the same time, I scared myself out of this position, just looking at the risk and being like, shit. So, maybe I could have held on to it, thinking about it now, but it was extremely impulsive. I didn't feel good about it at all. I knew that I had to just get on out of there, right? So I'm like, motherfucker, what did you just do? I'm looking at this. I'm looking at how deep down in the discount that I'm selling. Of course, only on the 1 minute time frame if I'm not aware of the higher time frame dealing range. This is still in a premium. It's still far off from my objective. The objective I was aiming for was, let me pull up the 15-minute chart. Pull the 15-minute, and I was aiming for Monday daily low. So that's still well in a premium, right? So I guess you could say this is the trade that could have been, but I don't look at things that could have been. I just look at what happened. It's never coulda, shoulda, woulda. It's, this is what happened today. How can I grow from it? That's it. So, I missed out on a 6R trade, impulsively jumping to the market. All I had to do was place a sell-in order on first presentation, okay? And then because I missed the move, what I did was that I stepped away for a second. I was extremely emotionally heightened at this point in time. So I stated, I have to step away here. So I literally stepped away. I went outside, got some sun, put my feet in the grass for, I guess, 10 minutes. Then I came back, and I looked at where the market was when I came back, which led to trade 2. So when I came back, I'm noting this gap right here. I'm noting how the market came just shy. I'm gonna start using this a lot. Just shy of previous day low, but did not take that low, right? So I'm gonna put this in my favorite toolbar real quick. So because it did this right here, this is priming of liquidity, meaning there's a strong reason for the market to want to come down here. There's unfinished business. It's a high probability that the market's going to come back down there, but it only does after it offers that 15-minute premium array. So I'm going to get rid of these levels. So this is what the market actually rejected for a continuation. And this is where I framed my continuation off of, was this gap right here. So again, instead of just confidently selling that 5-minute civvy, what do? I let the market react to it. I note how this candle trades up, closes below consequent encroachment. This candle is a strong down candle in the moment, but it closed back below that candle. But as soon as it crossed the open price of that, I'm viewing that as a change in the state delivery, because this up candle, to me, in the moment, was confirming a reaction to that 5-minute civvy. But then I just get ran over here, and then it makes the high, trading into that 15-minute gap. And then we get that continuation down. So 3 things from today. Number 1, the emotional trigger, when the market just leaves without me, without giving me an opportunity to get on side with the move that I'm looking for. It doesn't give me my fill. Number 2, instead of just confidently executing at the PD array that I am confident the market should react to, or I guess I'm not confident in a reaction there, because if I was, I would just place my sell limit order there. But instead of just selling that, I react to the reaction off of it, which leads to an impulsive trade, which leads to skewed risk, which puts me in an extremely uncomfortable position, which I put myself in today. The third thing is I have a really strong inability to get on side with the move. I don't know where to frame it. I don't know how to time it. When I'm trying to get on side with the move, typically I will sell short in a discount and buy in a premium. In this case, I sold short in a discount. The market only reversed once it offered that 15-minute gap. So although today was an extremely, extremely rough session, there's a lot of value that I gained from it, and I'm actually thankful. So I had to sit down and literally do a journal entry, because after the end of the session, I'm noting how I'm $276 in drawdown this week, and I'm starting to feel feelings that my past self used to feel. In the past, after red days like this, or red streaks, this is literally just 2 back-to-back red days, that's it, it's not shit. But in the past, I would start to lament. I would start to feel sorry for myself. I would start to get down, and I would dig myself in a hole mentally, feeling victimized, feeling resentment, feeling like the market's doing this to me, feeling confused, feeling lost, feeling stuck. And I would dig myself in a hole mentally simply because I have a couple of losing trades. And all I did was just, like I said, put me, it doesn't do anything for, it literally does nothing for you. Thinking negatively about your trading performance does absolutely nothing for you except weigh you down. It's a weight that you can literally feel physically. And as soon as I started having those negative thoughts come into my mind, I felt the association with my past self and how my past self used to do that. But that's a version of me that I've grown out of. I'm not the same me that I was a couple of months ago because I continuously grow and I continuously evolve. So I don't allow myself to do that anymore. As soon as I feel those thoughts, as soon as I am aware of those thoughts coming in, boom, I'm shutting them down, and I could literally start to feel the mental weight that I'm creating in my mind by thinking this kind of way about my losing trades. And so as soon as I bring awareness to that, I know that I need to snap out of it, bring myself out of the hole, don't allow myself to fall back into that old trap, the old wall that I literally build up mentally in my mind, just myself, and pull myself out of it. And instead of lamenting, instead of feeling resentment, what do? I do the process that allows me to extract the lessons that I learned from that session and grow from it and get better. And so I was actually extremely proud of myself for my ability to handle the way that I lost today, because it was an extremely rough session. I mean, the market gave me exactly what I was looking for, and I came out red. That sucks. That fucking sucks. Of course it does. But it is what it is. I got the outcome that I deserved, whether I realize it or not. So all I can do is go back in and learn from it. That's it. So I'm really proud of myself for the way that I'm viewing these red days because they aren't dragging me down mentally. Although outside of that, the back testing work that I'm doing, I am starting to feel a bit weighed down mentally. So I think aside from live trading, I'm literally just going to do something else, work on something else. I'm probably just going to read some books and work on my ability to articulate and speak better. That's it. So I'll show you guys a brief overview of my daily review for the end of this video and how I went through and solved everything and what I did exactly. Okay, what is going on with TradeZilla? All right, TradeZilla, how you want me to be an affiliate if you're gonna have all these bugs and glitches? Come on. Okay, there we go. All right, so what did I learn? The strong emotional trigger when the market just leaves without me, not getting me filled, runs right to my take profit objective, makes me lose my composure. I get frustrated with the market, I feel resentment, and begin anxiously trying to find a way to get on side. I mentioned that. Which leads to chasing, which leads to skew risk, which puts me in a very uncomfortable situation where I know I fucked up. Number 2, strong inability to get on side. Instead of confidently selling the PD rate I know price should reject and continue trading for my objective, I choose to let it react to it, then get an entry, which leads to chasing, which still leads to skewed risk, which puts me in an uncomfortable position where I know I fucked up again. And then my strong inability to get on side too, basically another way that I struggle to get on side. Now when price has made a strong impulse leg in favor of my draw, I don't know where/what PD array to use to get on side with the move, and I end up selling a deep discount. It's hard for me to trust the timing of the continuation down and where it'll happen. Notice how I was able to tell you guys all 3 of these things without even reading this. What I just said to you was what I already told you. But I didn't even review this before I started this video. I just got on here and started talking. But I know myself so well because of the process that I do. So, do you think I'm going to be able to fix these losses? 100%. Or fix these mistakes. That's what I meant. You think I'm going to be able to fix these mistakes? 100%. If I'm aware of them, that's the first step to problem solution, right? The first step is awareness. So, I think that about does it. Nothing else to really cover. Actually, one more thing from the Miro board. What the hell? One last thing. The other thing that I did was not that. I wrote them down. My weaknesses and my emotional triggers. The 3 things I learned from today. I'm grateful for the lessons that I learned today. Okay, folks? Be grateful for the lessons that you receive from each and every trading day. And you have to use it. You have to use it to move you forward. Okay? Stop feeling sorry for yourself. Stop feeling down. Stop lamenting. Stop feeling resentment. Push yourself forward. Nobody else is going to do it for you. You got to move the needle. So get it done.